Okay, as I said before we broke for afternoon tea, we're now going to pivot to a focus for the rest of the afternoon on shareholder activism. To kick us off on this topic, I'd like to welcome Brett Clegg, who probably needs no introduction, but was recently announced as chair of APAC for Sedali & Co. Congratulations on that appointment, Brett. Who's going to talk to us about trends and themes in Australia and New Zealand, shareholder activism, trends and themes in Australia and New Zealand, with a particular focus on 2024 and some of the trends they saw last year. So thanks very much, Brett, and I'll introduce the rest of his panel after his presentation.
Thank you, Ian. Actually, in my rather eclectic career, I was saying to Jill Campbell earlier that my association with ERA goes back to the mid-noughties when I was at Macquarie, and we did a lot of work in the earlier days. So it's a pleasure to be here, and ERA is an association that I personally have a lot of time for, and it's great to see you guys going so strong till today. So yes, my presentation is, as Ian said, on activism. It's certainly an area that's occupying a lot of media headlines and focus around boardrooms around the country. I'll be doing a presentation for probably just under 15 minutes, providing an overview of the different kinds of activism we're seeing, but equally what are the trends and some of the key issues that are at play. I've myself worked across a number of activist situations, including acting for the board at Lend-Lease and likewise Endeavour, so I've had sort of front and centre sort of experience of some of the things that are going in this space. So if I just go to the first slide there, broadly speaking, activism, and it's sort of self-evident, it's a strategy to leverage equity stakes in a corporation to influence its behaviour. You can broadly categorise activism in sort of two sort of arenas. The first, which is value-based, which is obviously unlocking financial value of some kind. The second is values-based, which is addressing environmental and sustainability objectives. It's that lens that I'm going to walk you through in this presentation. On this slide here, and I should say as well, a PDF version of this will be available to attendees after this presentation and panel, so you don't need to take notes, it'll all be with you. The purpose there is what we talked about, it's bringing about change, exercising rights as owners or partial owners. The methods, which we'll talk about today, vary. There's direct dialogue with management, there's official letters, formal proposals, media pressure, which we'll talk about in the panel with Anthony from the AFR, as well as occasionally litigation threats. Issues obviously range, as you can see, from the financial to the governance, to the environment, and there's a variety of types of activists, which we'll again go through. So if I start with values-based activism, and Will, who Ian will introduce later from Market Forces here, will be better educated on this than me, and will talk to us through the panel. But essentially, these are mainly sort of non-government organisations, occasionally high net worth individuals and civil societies, and those groups you would know, ACCR, Market Forces, Get Up, and what they're trying to do is force companies to do better on environment and sustainability. Typically what they do is they buy fewer shares than what a value-based activist would do. They recruit and activate retail shareholders to lodge shareholder resolutions and apply other forms of pressure, and they're seeking to force change through greater disclosure and typically faster action on emissions reduction and decarbonisation efforts. On the right-hand side, there's some well-known examples there, from recent years. Everyone's very familiar with the AGL demerger and campaign around that. Obviously, the Santos situation is one that has been widely focused. We were talking about that earlier with Will and Anthony. Likewise, Woodside Energy with their CTAP. And then, interestingly, and I'll touch on this again on the next slide, we're seeing a rise in what you would call nature-based activism, which is a greater focus on sort of biodiversity and sustainable sourcing. Two examples of that were Woolworths and Coles, and as you can see there with Woolworths, there was a resolution at the AGM relating to farm salmon, supplying on their shelves. So, we're probably expecting more of that kind of activism to be seen. Again, most of the common approaches you can see there as well. Thinking about some of the trends and what we've seen in values-based activism, my colleagues in the shareholder services and proxy business of Sedalia have supplied me with these statistics. There were 21 ESG-related shareholder resolutions lodged across 11 different ASX 300 companies. 9 of those were from market forces, including the very well-known case and publicised case around APA Group, but likewise ANZ, NAB and Westpac. One of the other things I'd call out is the emergence of SIX, the Sustainable Investment Exchange. They're a new player in this space. They're pitched as a platform for ESG, sustainability-focused individual investors to affect change, and they drove those resolutions that we talked about earlier at Coles and Woolworths. Another point I would make is obviously there's a growing number of companies holding the non-binding advisory votes approving climate transition strategies, or Say on Climate's SAC. Raz, I did notice you were trying to avoid my presentation, so well done. There's more of those that are occurring. The Woodside one, which my colleagues worked on, was obviously something that gained a lot of attention, given it was in many senses a world first. Coming back then to value-based activism, which I think what many of us sort of associate when we think about the word activism in the first instance. What are we seeing? Well, in this market, we're seeing a rise in alternative asset managers with funds dedicated to unlocking shareholder value. This is something of a new structural reality within this market. There are some well-known funds that you will all be familiar with, Tanara being one, HMC Capital being another. On the next slide, I've got a list of different participants in this space, so again, you'll have that to take away. Not to be confused with the typical passive or active investors that are long only or otherwise who don't publicly initiate or agitate for change as a business model, which when we talk with Raz later from Wavestone is not an activist fund, so but it's not a business model if that's the differentiation there. Some of the examples you can see on the right there. The Matheson Group was a value-based activism, but at the end of the day, they weren't a fund of that kind. Obviously, they were a strategic shareholder. Tanara, we talked about. You'd be aware of the Helios campaign, which effectively removed the chair, appointed a nominee to the board, and drove the sale of their pathology division. Was it radiology division? I'm not sure which. And then also Lend-Lease is a situation well known in terms of how that played out. It'd be interesting to get Anthony's perspective on that later. Bell Rock, not a local activist, but obviously took a very big position and sought to influence the acquisition of BHP coal mines by Whitehaven. So again, common approaches you can see there along the bottom, aiming for REM strikes, seeking to influence director appointments, EGMs, which is the case you saw in certain situations, I think, where you're trying to actually change, either the chair or more than one director. So just touching on my next slide, if I may. I've listed here, it's certainly not an exhaustive list, but there are a number of participants in the activism space within the Australian market, a mix of both value-based and values-based. You can see there on the value-based side, Alan Gray is a well-known, I'm not sure they would define themselves as an activist. Many companies would consider them one, but I'll give them the benefit of the doubt in that respect. ACCR, again, we talked about there, they're very focused on heavy emitting companies, very much around decarbonisation efforts. In the case of Alan Gray, they were very much involved in the Lend-Lease activist campaign alongside Tanara and HMC, albeit they all came from different perspectives, but had a similarity of views. And obviously ACCR was very well known for the point I mentioned earlier on Santos taking them to federal court for misleading and deceptive conduct. HMC is a new fund like that of Tanara's long-term value fund. They have a range of holdings, as I mentioned earlier, Lend-Lease being one. Ingenia was a situation where they really did intervene in the company. As an activist, affected CEO and board changed, pushed the sale of key assets and are seeking to drive sort of sector consolidation there. Many of you will also know James Hawkins at L1, well known. One of those situations that they've been involved with was they heavily influenced the decision by Luca to spin out their royalties stream into a new company, Deterra. Market forces we touched on with APA earlier. Will, who's joining us, will speak to that a bit later, hopefully. Perpetual, interestingly, launched an activist fund as sort of almost a sidecar to its main long-only fund. That fund has been very public with respect to Ramsay Healthcare, particularly around the view that Ramsay should divest certain assets offshore and concentrate its focus principally in the Australian market. And likewise, obviously, I mentioned Tanara with respect to Helios there. So what is the role of communication in activism? Well, firstly, there's no one situation that is the same. So this slide is very much conceptual and seeks to sort of map out what is the typical playbook for an activist. And this, I should say, is I'm referring to a value-based activist in this regard. The typical actions, obviously, in the early stages, they'll build a stake under the disclosure limits. Depending on what their agenda is, they may even use CFDs or other forms of leverage to build and increase their influence. You'll see them emerge at results presentations, conferences or events. They will contact often the IR, and all of the IROs in this room some of you may be familiar with that, request materials, all of the things that you would anticipate. If they move into, and that phase is typically obviously more private and less aggressive in its nature, they'll typically then move across into applying a greater level of pressure, and that's direct engagements. It's very often seeking meetings with individual executives and board members and starting sort of often a letter writing campaign. We see that very, very often, and publicly they might push through a disclosure limit, all sorts of things, and the idea is it is a campaign. They're just building the pressure on the company, seeking to almost dislocate its position and make it more vulnerable to affecting change. And again, once that shifts across into the public domain, it then escalates, and that's where media is an incredibly important player in activist situations, certainly in this market. I would say that one of the things that is a reality is that activists are often the one choosing that time of escalation. Companies often find themselves on the back foot. Now, there's a lot of text on this next slide, so my caveat earlier about you having a copy of this presentation I'll refer to again, so I'm not expecting everyone to read this, and I think you're all hoping that I won't read it either. Sorry. Not even. Oh, here we go. There we go. There's the slide with a lot of text. So here's a few reflections. So in our experience when emerging on a register, value-based activists, they typically position themselves as constructive players. Talk about alignment, where they see the strategy moving. Frankly, I think with any activist shareholder, healthy scepticism is always required. The one thing about activists that is worth understanding is that the pivot from friend to foe is a lot quicker than a long-only fund, and that's something worth bearing in mind in that engagement. This is one point that I'm going to pick up later with Anthony, but in my view, there's an inherent symbiosis, if I like, between the media and activists, which places a target at disadvantage. I think activists create conflict creates reader interest, reader interest makes for good copy. So The other point I would say, there's a few others there. I don't think I'll have time to walk through them all, but there's very much an ownership mindset there. We're your owners. Why aren't you listening to us? We're going to tell you what to do, and you should be responding to that. There's a few other things that are quite interesting that are out there at the moment, one of which is activists often seeking confidential non-public information prior to key events like strategy days or things of that kind. Caution's often always advised there, but again, that's something that you would engage with your company secretaries or general counsels. Just finally, I think with activists, you're seeing a lot of these activist funds led by former investment bankers, Victoria at HMC, obviously John at Tanara, James at L1 is a former investment banker. They tend to view the situations almost like a deal transaction perspective, and that's important to be cognizant of. ESG players often come from a different perspective, which can be academic, political, and they often bring a whole different kind of skills to the table when they're driving that change. So just a final slide before I hand back to Ian and then we jump into the panel. I've put together some recommendations. Some of them are probably obvious, but just capturing them on the page, what I'd say to you when you think about dealing with a situation where you have contention on your register and activists emerging or seeking to affect change. The obvious one, just know your register, be across it, understand if there's activists emerging there. Typically you may see one taking a smaller stake. Seeing that early and starting to think about what the implications might be is important. Speaking to the converted here, but build credible and respectful relationships, obviously, with key investors and proxy advisors. I think the third point there, activists very rarely turn up without having done an awful amount of work on your company and your situation, and it's surprising the degree of detail and effort they will go to. So understand that more often than not, they're not coming up in an undereducated position. They're coming up with a very, very clear perspective on where they see value being created. Again, I'll leave these for you to look through. I touched on that trend of seeking confidentiality agreements and standstills. In 9 out of 10 situations, I've seen companies reject that for understandable reasons, but it continues to be a request that many activists make. So look, thank you for listening to this. I'll sit down now and go through the panel. I think, Ian, you're going to come up and introduce my co-panellists. So thanks, everyone.